Hello, welcome back. In this video, we are gonna be taking a look at a company that has been discussed lately because of what has been going on with the pandemics, and that is SIGA Technologies. You'll see that it's trending right now. You'll see it being discussed a lot in stock tweets and Twitter. And so I wanted to talk about it because it has had a massive movement to the downside, really. You can take a look at the metrics here. You will see that it has been about 15% down pretty much in the previous trading session. And if you take a look at the 5-year chart, you will see that it has had its glory days pretty much when, the pandemic, the supposed pandemic of Monkeypox came over. And I'm assuming that because of there have been some developments lately about this one. I think it has been declared sort of like as a dangerous state in terms of monkeypox right now. They may be getting some traction in the upcoming days or months. So I think it's worthwhile taking a look at it because it's been trending also in the markets. Again, you can see it in the social trends here. And overall, if you take a look at online, you will see it being discussed quite a lot. Now, for this one, we're going to be doing our usual stuff. We're going to take a look at the metrics. Before we do that, please remember to leave a like and subscribe if you're not a subscriber already. That helps tremendously. And for this one, you'll see here that the P ratio is sitting at 15.4. So at some point it was negative when the company was losing money. Now it's marginally positive and it's actually low. So that's actually a good thing to see. Although the price to free cash flow is much higher here. Looks like the net income that the company makes doesn't really convert to free cash flow. We're going to examine what is going on right there. But the outstanding shares have been going down instead of up, which I found it hard to believe for this kind of company. That's such a small company. They still do not issue many shares. That's good thing to see, really. And they seem to be fairly solvent here with total liabilities compared to free cash flow. It would take about 3.5 years of their last year's free cash flow to pay back all the total liabilities that they have, meaning that they are, generally speaking, a self-solvent company here. The 5-year revenue growth has been increasing, although they have had better years, and net income growth, the same thing really with revenue growth. It's the free cash flow that has ups and downs, and we will examine that in a little bit more detail. Now, return on equity is high over here. This probably means that the equity of the company is rather low. This is why we're having such a high number here. And the net income margin is also rather high. You will see here that the company has been paying a 3.7% dividend with a free cash flow payout ratio that is outrageous here, but the payout ratio is normal when you compare it to the net income. So what is going on here? If we take a look at the dividends tab, you will see that this is basically a special dividend. This is the only one that has been paid by this company. It's a special dividend, so this kind of dividend payout ratio is irrelevant really for this one, so it's not a problem at all. If we take a look at the stock news page, you will see that the stock has been roaring at some days. Back in July 13th, for example, is in focus following UK approval of monkeypox treatment. So it's being talked about quite significantly lately. But remember, this is a very small company. If you take a look at the company profile, very few employees. Stock price doesn't really move that much overall. But we'll see how it's going to be moving on through the rest of the year or so. Of course, this kind of company is pretty much a one-trick pony. It has just, it's pretty much known about its T-Pox product, which is a formulation antiviral drug for the human smallpox disease. And so, yeah, you kind of have to be careful about this one. Now, if we take a look at the financial statements of the company, income statement of 12 million to 133 million in 2021 seems to be getting a little bit of a boost lately. And net income that is marginally positive here, 69 million. It used to be better though back in 2018, and that may be a worrying sign really. The revenue of the company was much better back then. It seems like it's coming back from the dead really since 2018. Now, in terms of the balance sheet, what we would kind of expect, the total equity is rather low here, 174 million, but this is a small company again. And the total liabilities, 40 million here, is fairly small here in terms of the total liabilities that the company has. And if you take a look at the cash flow, it's 11 million. This is how we're getting the 3 point something, what was it, 3.2 or something, in terms of the multiple free cash flow, 3.2 or so times free cash flow to pay back all their total liabilities. So the cash from operating activities it was positive in terms of the net income of the company, and then becomes a little bit less. So The company, because of change in working capital here, so they're spending some cash that affects their current assets pretty much, it's actually going down, and so profitability is not really contributing that much to free cash flow that the company generates. And if we take it lower here, you will see that the free cash flow is about 11 from 68 back in 2018, so it has been going down, and also 2020 was a better year for them as well. Interesting to see here, but what we really want to see is, of course, what we're going to be getting as a price to pay for this company, and we're going to do that using our stock evaluation tool, of course. Before we do that, we can take a little bit of a look at what is going on with the insiders here. There's not much action happening really in terms of this one. For the most part, is pretty much awards from the company here. Nothing too interesting here in terms of any any purchases or any weird sales here. You will notice that it's mostly some directors selling stock here, and they have a lot of securities here. They're selling some. So nothing out of the ordinary here for the most part. Interestingly, if we take a look at the senator trades, there is nothing going on here, so no activity reported for this stock. Very interesting. I would expect maybe something to be moving here, but it seems like we're not having anything. And the next thing that I want to examine, of course, is finally the stock evaluation tool. See whether it makes any sense to buy this company, buy stock from this company. Now, the revenue has been all over the place, and 2018 was much better. It has dropped significantly, and then had a little bit of an uptick over here in 2021. And what can you go with? Again, the revenue growth has been tremendous in 2018, for example, because it started with like 12 million. So you cannot really go with this kind of values here because they are all over the place. Obviously, this is a very small company. We're going to go with something that is relatively high, but makes sense for a company of this sort potentially. 10, 15, and 20 is going to be what we're going to be trying. And the net income margin that the company has been achieving, again, all over the place here. Some years with very high margins, some years with lesser margins. Let's go with something that is going to be in between all these margins, because we don't have pretty much a point to choose from. We don't have like an average really that makes a ton of sense here, because again the company has been all over the place. And the free cash flow margin that we're going to use, again we're going to go baseline, something that's typical for stocks, 80, 90 and 100, because again we do not really have the numbers to tell us exactly what to use here. The history of this company has been all over the place. As you'll see, revenue and net income and free cash flow have been pretty much bouncing all over the place. The annual return that I'm going to ask for is 15% for this one, because it's a super risky company. Again, it's a one-trick pony. Right now, they're only known for the drug about monkeypox. So if that goes astray, that's not going to end well. And so this is why I'm going to be asking I'm going to be asking my tool to give me a higher return for SIGA Technologies here. Let's hit calculate and see what we're getting out of this one. And it's our low and medium estimates that are still in the red, and it's only our high ones that are in the green, with a revenue growth of 20% and a net income margin of 40% here, with a free cash flow margin that converts at the same rate, about 40%. Now, of course, these values are pretty high here, and it's going to be tough to achieve for the company. And even our low estimates, I think, could be potentially tough for the company to achieve, although they are more down to earth. They could happen. And the 3-year average, for example, net income margin has been 23%. The free cash flow margin has been 130%, really. And so, the revenue growth cannot really beat 90% every year. But overall, I think this may be achievable here. So, somewhere in between these values here, maybe $7-8, you could potentially make a case for this one. Remember, we have also tried 15% gain. If we try 13%, which is our casual one, our usual one, then we're gonna get a green for the medium one as well. Because the stock has fallen a lot, I suppose, this is why we are still in the green. It's not super overvalued, and it has fallen 14% again in the previous trading session. And based on what they have been doing financially, it's not a terrible thing to buy. But again, it's very risky because of the products, because it's just known about this one drug and nothing else really. So would I actually buy this one myself? Not really. I wouldn't buy this company. I could potentially look about maybe trading it in some of its up days or down days for sorting potentially. But buying this one is super risky. And if things go wrong with one of their medicines, which is TPOX, then this could be very problematic for my investment here. So I cannot see myself buying and holding for the long run, but rather trade this one. I did want to make a video though, because it's been trending quite significantly in the markets, and people may be looking for it and see whether they should or could potentially own this one, or whether it's a good idea or not. Thank you for watching the video. Again, remember to leave a like if you did enjoy this one, and I'll see you in the very next video, guys. Bye bye.